Replacement cost and actual cash value are two different methods used by insurance companies to determine how a claim will be settled in a home insurance policy. Replacement cost refers to the amount of money it would take to replace or rebuild your damaged or destroyed property with similar materials and quality without deducting for depreciation. The goal is to restore your property to its pre-loss condition. For example, if your 10-year-old television is stolen, replacement cost coverage would pay for a new TV of similar make and model without considering its depreciation. On the other hand, actual cash value, ACV, takes into account the depreciation of your property over time. It is calculated by subtracting the depreciation from the replacement cost. ACV represents the value of your property at the time it was damaged or destroyed. In the same example, if your 10-year-old television is stolen, the insurance company will consider its age, condition, and market value to determine the claim amount. It's important to note that choosing between replacement cost and actual cash value coverage can affect your premiums and the amount you would receive in the event of a claim. It's recommended to review and understand these options when selecting your home insurance policy.